We have Mr. Amit Tewary, who will be speaking to us now. And Mr. Tewary is the co-founder and CFO of Forfin. He's speaking from the fintech perspective, please.
Thank you, sir. And very good afternoon to Chairman, sir, and all my co-panelists. So, as Charan sir shared, I'll be sharing my views very crisply, of course, seeing the paucity of time on the aspects of fintech. And since our fintech is mostly in the area of financial inclusion, which actually the speaker just preceding me, Mr. Rajkumar, very well covered that segment again. So that will make my discussion much simpler that way. So, first aspect which I would like to cover is on the aspect of data democracy. So, the public credit registry, which we have envisaged and which is supposed to be in place, we should have it as soon as possible, consent based from the customer, like even any entity, whether an individual or a company, is in a position to share all its liability data. So, as of now, whatever we are having, the private credit bureaus, they only have access to the loan data which is being given by the banks and NBFCs. So it's of a broader data we are speaking about, the data regarding utility payments, bill payments, maybe electricity usage payments, tax payments, GST and all. So with all this powerful data, and if the customer has access to it, with his consent, if it can be shared with any of the digital lenders, very beautiful products can be created around that. So, of course, a lot of groundwork has already been done. RBI has nudged it, and of course, the processes are on. But if we can expedite the entire structure of PCR with more authority to the individual or the entity for which we are generating that data. Similarly, the other very important pillar of data democracy has been the concept of account aggregators. With NBFC AA's already in place, four or five of them already live, the process is already started. But as we see as of today, only the 4 or 5 major private sector banks are live. Most of the PSU banks are still not live on the platform. So, from the asset perspective of an entity, we are not really having the full access even now. So, our request will be again a slight nudge from RBI to PSUs so that more data can flow in. And that is more crucial from micro SME perspective because micro SMEs typically tend to bank more with PSUs, more with cooperative banks. So, their data is still not that much available with the account aggregators. Apart from it, the other regulators who are also supposed to nudge their entities to start sharing data and set the processes. So I'm talking about IRDA, I'm talking about SEBI. So that asset data, related data is still not live with the AA. So some work, some really push needs to be there in place so that really we can scale up exponentially the digital landscape which we have thought of. The second aspect, I'll say more about the fintech ecosystem, more restricted to fintech lending ecosystem per se. There, if we see what has happened is, whereas we are in a physical space, it is easy to look at the coordinates. So, if there is a money lender or some unscrupulous element, you can really identify. But in virtual world, that becomes a bigger challenge. And we saw last year there were challenges regarding that. So there are people, negative characters who go online, create their apps, and maybe fleece certain sections of the people. So again, RBI did some very preemptive action there, and a working committee was also set up, and some recommendations, some very beautiful recommendations have also come in. One such thing which I think we should really expedite is the formation of an entity like Digita or whatever has been envisaged, an entity which will actually verify and certify every app which goes on a Play Store or an App Store. So, without the certification of this entity, whoever this entity we envisage as, no app should go online, either at Google Play Store or at iOS, and start disbursing loans so that we can regulate on what is happening in that space. Second, again, from a digital lending perspective, now it is all about innovation, right? Digital lending and all this space is all about innovation. And innovation, if we put in a lot of regulations, it tends to stifle the innovation part of it. But then some sort of sanity also needs to be there. It shouldn't be a segment that anybody just walks in because there are sensitive issues like data privacy, data secrecy and all which is there, data security which needs to be there in place. So there has to be a body which again has been already thought of and which should be in place, some self-regulatory structure, some self-regulatory body to be in place, which will give the outer boundaries at least. What are the do's? What are the don'ts? What are the minimum data standards which we need to have? What are the minimum tech specs which a LSP needs to have to get into and to work as a loan service provider? So these boundaries, I mean, there can be boundaries in terms of the vintage, the experience of the people who are running that business, the kind of net worth which that entity is having. Surely we can't really restrict it to the age of the entity, because age of the entity, of course, it will stifle out the innovation and the startups in the segment. But then there can be other parameters. Net worth can be there. The promoters can be looked into, that what is the vintage and learning and understanding and background of the promoters are. So such qualitative parameters can be looked into and quantitative parameters can be looked into, and we define an outer boundary for these LSPs. Third, sir, I'd like to share my views more in terms of financial inclusion and the problems as a technical outreach for micro SMEs which we face. One is in terms of KYC itself. Now, when we look at other regulators, other space, like suppose if you look at for mutual funds or if you look for insurance segment, so entities controlled by IRDA or SEBI, their CKYC is being used a lot. However, when it comes to lending, whether you are using CKYC or if you are an NBFC, like what Rajkumar was referring to, if you are if you are an NBFC, you have to do offline validation of Aadhaar. So even after doing all these processes, you are supposed to do VCIP. Now, VCIP is video customer identification process. Now, this process doesn't really work very well where the micro SMEs are located in upcountry locations. Like, sir, even now when we are having this panel discussions, a lot of us are facing problems related to videos, right? And when you make video CIP compulsory, it does take off the sheen for which all these database is being generated. So my suggestion will be that at least for a small ticket, maybe say till 1 lakh rupee, the VCIP in itself, I mean the process of CKYC itself, the data which is generated by the SERSEI, it should be considered as full KYC for maybe a ticket size of up to only 1 lakh rupee. And this data can be again validated through an OTP. So the customer can give a consent that yes, this data is correct, it hasn't changed. And if the data hasn't changed, for small tickets at least, we should go ahead with CKYC in itself to be full and complete from KYC. Other aspect I wish to share was that lending, end of the day, is all about collecting prudently. If the collections are not being prudent for whatever reasons, it creates problems in the system. Here we have seen that if you look at NACH, NACH again, while the private banks, the systems are very smooth, some of the larger PSU banks, the systems are smooth. But with a lot of cooperative banks and some PSUs, there are a lot of rejections of NACH. So the registrations are not happening. So
Yeah,
you're not able to create the...
Sorry, we missed your last point. If you can maybe switch off your face and video, and we can hear the last point again.
Yeah, sure, sir. So the last point which I wish to share was on the aspect of collection of the EMIs. So there, if we see the conventional method which we have of NACH, here there are a lot of rejections in registration of NACH, especially in cooperative banks where many of these micro SMEs have their accounts. The other option which is there of eKYC. Now, eKYC, the problem is it has to be authenticated either through a debit card or through net banking. Now, net banking also micro SME doesn't have, and very often they don't have a debit card. Now, the other solution which was again thought of was e-sign of these mandates through Aadhaar. Here, the challenge is that the mobile number which is seeded in your current account has to be the same mobile number which is seeded in your Aadhaar database. There again a set of problem comes in. Now, the beautiful solution which we can have here, sir, is from the UPI autopay perspective, which is really scaling up well, where now almost 40 banks are live. Now, the hitch here is, the restriction here is that the amount is only capped at rupees 5,000. Now, even sir, if you look at a small loan amount of 1 lakh rupee for 1 year for a micro SME, his EMI will be almost near to 9 to 10,000 rupees. So if this amount can be increased from 5,000 rupees to 10,000 rupees, it will be of great help. So these were the broad submissions which I had, sir, on the subject.
Thank you. That was very useful. Let me just highlight a couple of things. As I mentioned before, we had this Vision 2050 paper at eGrow, and I think you have done an excellent job of actually out some, because one of the major elements of my suggestions there was that we must have a good digital regulatory system and support what I call digital public goods from the government. We are actually pioneers in this. I said this, we had this professor from the US, very well-known professor a couple of weeks ago. And I think all your suggestions on regulations, I think are very, very useful, which, again, as I said, I think our job is to bring these to the attention of the regulator, because they have to make judgments. I never try to second guess RBI. I make the suggestions and then I have to trust the governor and his staff to make the judgment. But I think it is our duty to bring it to this attention of them, not just once, but again and again. So that's good. So that's what I would emphasize, given the